Welcome to the Banking Update channel. I am Neelam Jha, ex-Chief Manager, Faculty, Central Bank of India. Today's topic is the Income Tax Act 2025, which comes into effect from 1st of April 2026. So, in 2 days from now, that is on 31st of March 2026, it's going to be the last day of the 6-decade-old Income Tax Act 1961. Today, we will deliberate on the new Act and find out what changes have been brought in. To begin with, I must say that the new Act uses simpler language, tries to reduce excessive cross-referencing and aims to lower the compliance friction as well as dependency on complicated interpretation. From a taxpayer's perspective, it does not impose any new tax. मेरे और आपकी तरह taxpayers के लिए ये एक अच्छी खबर है. Moving ahead, the Income Tax Act 2025 presents a well-balanced, nuanced, and a transparent approach to the Indian tax system. Let's delve into its important aspects, beginning with reduction in volume and complexity as compared to the previous Act of 1961. This new Act has cut down sections from 819 to 536, rules from 511 to 333, and from 399 forms it has been brought down to 190 forms as compared to the 1961 Act. So, the Income Tax Act 2025 has a total of 536 sections, 16 schedules, 333 rules, and 190 forms. Now, coming to the tax year. It is a new term introduced in this Act. Previously, in the 1961 Act, the year in which the tax was assessed was called Assessment Year or AY. But the new Act replaces assessment year and financial year by the term tax year. एक एग्जाम्पल से इसको समझते हैं. आप जब 2024-25 का टैक्स रिटर्न फिल करते थे तो फिनेंशियल ईयर होता था और असेसमेंट ईयर होता था, राइट. फिनेंशियल ईयर हो गया 2024-25 और असेसमेंट ईयर हो गया 2025-26. लेकिन अब इस नए एक्ट में सिर्फ एक टर्म यूज होगा, टैक्स ईयर. यानी जिस साल का टैक्स आप भर रहे हैं वही टैक्स ईयर कहलाएगा. है ना सिंपल. नो मोर कंफ्यूजन फॉर असेसमेंट ईयर एंड फाइनेंशियल ईयर. यानी कि जो फाइनेंशियल ईयर 2026-27 है वो कहलाएगा टैक्स ईयर 2026-27, राइट. पर यहां एक सवाल आता है. द न्यू फाइनेंशियल ईयर 2026-27 is about to kick in. So, how will the return filing for 2025-26 be done? Well, for the period of income earned between 1st of April 2025 to 31st of March 2026, it will be governed by the Income Tax Act 1961. Whereas, when the period of income earned is 1st April 2026 to 31st March 2027 and onwards, it will be governed by the Income Tax Act 2025. So, for AY, Assessment Year 2026-27, the returns will be filed as per Income Tax Act 1961, but the payment of advance tax for the tax year 2026-27 will be under the new Act. And the returns from tax year 2026-27 will be under the new Act. So, there is going to be no overlapping of jurisdiction. You might be thinking that what will happen to the taxpayers' rights under the old Act, right? So, relax. There is a provision in the new Act that if a taxpayer was entitled to claim a refund under the old Act for any tax year prior to the commencement of the Income Tax Act 2025, he or she still remains entitled to that refund even after the new Act comes into force. Similarly, the pending proceedings and notices issued under the Income Tax Act 1961 will be completed under the provisions of old Act. To make it clearer, the Act says that effective from 1st of April 2026, the 1961 Act will be repealed. However, its provisions will continue to govern all tax years beginning from 1st April 2026. Now coming to a very important point. Please note that there will be no change in the existing PAN numbers and TAN numbers. Further, the faceless assessment process and the faceless appellate framework, etc., shall also continue under the Income Tax Act. As a taxpayer, one might be worried if there is a change in the tax payment procedure in this new tax act. Well, the answer is a big no. The new act makes no changes in the framework governing the manner of tax payments, be it through advance tax, TDS, TCS, or self-assessment tax. Even the modes for remittance of taxes remain unchanged under the Income Tax Act 2025. But the TDS sections, section 192 to 194T in the Income Tax Act 1961 have now been consolidated under two sections, namely section 392 and section 393 of the Income Tax Act 2025. Let's briefly understand these sections. Section 392 of the new Act lays down the provisions relating to deduction of tax at source on payments made under the head salaries. And Section 393, it provides for deduction of tax at source on other types of payments such as commission, brokerage, rent, payment on transfer of certain immovable property other than agricultural land, and other specified payments. Further, Section 393 of the new Act contains three tables applicable to three broad categories of pay residents, non-residents, and any person. But the rates of TDS or TCS as well as thresholds are largely the same as in new Act with that of the old Act. For exact TDS or TCS rates, reference may be made to the relevant provisions of the new Act and the Finance Act as applicable. Similarly, there is no change in the rate of interest for delayed deposit of TDS or TCS under the new Act. TDS, as we know, is the tax deducted at source when the payments made from an account exceed a set limit prescribed by the Income Tax Act. Similarly, TCS is tax collection at source by sellers during transaction with buyers when it exceeds the limit set by the Income Tax Act. So, for failure to deduct TDS or the failure to collect TCS, interest will be charged at 1% per month or part thereof from the date the tax was deductible or collectible to the date it is actually deducted or collected, as the case may be. And for the failure to deposit TDS after deduction and TCS after collection, interest will be charged at 1.5% per month or part thereof from the date of deduction or collection, as the case may be, to the date of actual payment. The rates of 1% and 1.5% in the above two cases, they remain unchanged from the Income Tax Act 1961. Now, for those who are filing the Form 15G and 15H, there is some good news. As you know, Form 15G was for residents below 60 years of age and 15H was for residents above 60 years of age. It allowed them to furnish a self-declaration for non-deduction of TDS. But from the tax year beginning 1st of April 2026 and onwards, these two forms have been merged into a single unified form number 121, that is 121. So that means that Form 15G and 15H will cease to exist from the new tax year 2026-27 onwards. Now coming to Form 16 and Form 16A. So for the salaried class, these two forms are very important. So in the new Act, they have been replaced with Form 130 and 131 respectively, and it will be having a more detailed summary of salary earned, the applicable deductions and the tax deposited. In conclusion, we can say that the Income Tax Act 2025, there is no change in the income tax slabs, but what changes is how the income, deductions, salary, capital gains and disclosures, they are reported, verified and filed. With a taxpayer-centric approach, focusing on improving digital integration, Income Tax Act 2025 is a strong step towards building a more transparent, efficient and taxpayer-friendly tax administration in India. By simplifying the tax laws, reducing litigation and aligning with global standards, the Act lays the foundation for a digital, data-driven economic framework. That's all for now. Thank you.